slight edge coming in on the escorts as well as the M&M story, the tractor story, so to say, but it's the consumption story which is taking your breath away. We did speak about a couple of stocks. Now, just keep an eye out on Trent. Trent, of course, is the company that runs Westside and Zudio, and also has a joint venture with Inditex, which of course runs the Zara stores in the country. And there we have seen a big spike right now in just the last few minutes or so. In fact, all through the day it was doing well, and now it's moved to the high point of trade. Maybe the street believes that a lot more people will buy a lot more clothes this festive season. With that, we take time for our standout brokerage report of the day. Goldman Sachs has actually upgraded Interglobe Aviation to buy from neutral. Nimesh joins in with more details. Nimesh.
Hi Sonia, today's standout is an Interglobe Aviation, a big upgrade from Goldman Sachs. They've upgraded the stock to a buy now with a target price of 20 to 10. Now, a couple of reasons they've upgraded the stock. One, Indigo's market share has gone up from 48% in Feb 20 to almost 57% as of now, and that is likely to sustain, given that there is a liquidity challenge for the smaller incumbent players. So that's the first reason. Second, Goldman Sachs believes that industry is going to see a consolidation between two players, that is Indigo and Tata Group, and that will drive a lot of pricing discipline. Third, Indigo's cost leadership is going to ensure that there's going to be profitability going forward, and these are the key reasons why they've upgraded the stock. As far as the near-term catalyst, quarter 2 is going to be weak, but there is a setup for a strong quarter 3 given the fact that the crude prices have fallen sharply. Even in terms of, despite the strong growth potential, the stock is sitting at just close to 9 times FY24 and 8 times FY25 EV to EBITDA, and hence a big upgrade on Indigo. Personally, the biggest risk or the biggest overhang on the stock will be the Ganwal stake sale. Remember, they sold just 3%, and now there is a 5-month lockup. But after that, there's going to be supply overhang. So that's going to be a key concern. But broadly, Goldman Sachs' key reasons is on back of earnings and on back of leadership, they've upgraded the stock to a buy now with a target price of 20 to 10.
Okay, thanks a lot for that. Well, with the way travel is picking up, no surprises there about that upgrade. But Angel One is gaining in trade today on the back of a very strong Q2 business update. Surabhi is standing by with more details. Surabhi, over to you.
Angel One, that is gaining momentum in today's trading session, and that is mainly because of a strong business update for the month of September. Their gross client acquisition saw a marginal decline and is at 3.9 lakhs versus 4.5 lakhs in the month of August. Their total client base, however, grew by 3.4% on a month-on-month basis and now is at 1.16 crores. Their average daily turnover saw a growth of 11%, and the number of orders were up nearly 25% at 9 crores. For the F&O segment, their market share remained constant, but commodity segment, that's where they gained market share of nearly 170 basis points and is now at 53%.
Okay, Angel One buzzing today. Thanks, Surabhi, for that. But Electronics Mart India IPO has also opened for subscription. The company will be issuing fresh shares to raise around 500 crores. Mangalam, you're tracking this. Tell us more.
Yes, I am, because it's a retail company for all the electronics stores, etc. It's an IPO that opens today up until the 7th of October. 56 to 59 rupees is the price band. Like you said, raising 500 crores is a fresh issue, and they're seeking a post-issue market cap of around 2,300 crores at the higher end of the issue price. What does the company do? It's the 4th largest consumer durable and electronics retailer in India. The top 3 include Reliance Retail, Croma, as well as Vijay Sales. It's got 112 stores across 36 cities, but it's got a leadership position in South India because 104 of their 112 stores are concentrated in Andhra Pradesh as well as Telangana. Almost 90 of their stores are under the name of Bajaj Electronics, and 11 stores of the company are owned. 93 are under the long-term lease model. What is the biggest opportunity? Like for any retailer, the biggest opportunity is for them to go ahead and open more stores and in more geographies outside of the South India. And what is the biggest risk? Like any retailer, competition from larger offline players, the kinds of Reliance and the others that I just spoke about. And secondly, all the online giants, because a lot of electronics, the small electronics in particular, are now being bought online itself. They will use 111 crores for capex, 220 crores for incremental working capital, and 55 crore for debt repayment. How do the numbers stack up? In FY22, they did revenues of almost 4,350 crores with about 7% margins, and the net profit was close to around 104 crores. In the first quarter of this year itself, they've done around 1,400 crores in revenues and 7% in margins with 40 crore as net profit. The only thing attractive about this IPO is the valuation. It's offered at 22 times trailing price to earnings. Its closest listed peer is Aditya Vision, which is about the 5th or 6th player in the country, which trades at around 47 times. And even if you take away the electronics part of it, all other retailers trade at much higher valuations. So valuations are attractive, but there is a fair amount of risk in a business like this.
Okay, thanks a lot for that. Explain the new IPO that opens today. Let's slip into a quick break. On the other side, more on markets and stock-specific action. Do stay tuned in.